Hello friends, and welcome back to Crypto in 5. If you've been watching the charts lately, did your heart skip a beat? It's Tuesday, January 6th, and just yesterday, the market delivered a drama more intense than a primetime soap opera. If the news about the US entering Venezuela to make arrests and launch military operations sent you into a panic sell of your Bitcoin, you might be feeling some serious regret right now. Why? Because yesterday, the market pulled a massive U-turn. Not only did Bitcoin hold its ground, it smashed through the $93,000 level, hitting a multi-week high. Even crazier, our long-dormant Dogecoin bucked the trend and surged over 10%, with trading volume exploding past $1.2 billion. It's a total fiesta for the bulls. So, what actually happened? Why is the crypto world acting like it's on steroids despite such high geopolitical tension? Behind the scenes, there's really one invisible hand driving this: the Wall Street giant Goldman Sachs. Just yesterday, Goldman released one of the most significant strategic reports I've seen in years. After reading the whole thing, I realized this doesn't just change the fate of one stock, it completely rewrites the rules of the game for the 2026 crypto market. Today's video is essential. I'm going to provide a strategic breakdown of the report. I'll share my perspective to help you read between the lines, explaining why Coinbase is becoming the king of infrastructure, why I'm concerned about eToro's future, and most importantly, what this means for your Bitcoin, Dogecoin, and your portfolio. This episode is packed with value, so let's dive right in. Let's get straight to the point. On January 5th, 2026, Goldman's star analyst team, led by James Yarrow, dropped a bombshell. They upgraded America's largest crypto exchange, Coinbase, from a cautious neutral straight to a buy. That's not all. They hiked the price target from $294 to $303. Friends, do you realize what that means? In Goldman's eyes, Coinbase still has over 34% upside potential. As they say, out with the old, in with the new. While Goldman was hyping up Coinbase, they were ruthlessly bearish on another platform, eToro. Goldman slashed eToro's rating from buy down to neutral and cut the price target to 39. This might look like a simple stock adjustment, but it's actually a paradigm shift in how Wall Street views the crypto market. Why would Goldman flip the script on Coinbase now? Is it because retail traders are active? Nope. If you still think Coinbase is just an online casino for gambling on meme coins, you're stuck in the past. I looked at their reasoning, and it comes down to two words: structural shift. Let me break down a set of numbers that actually gave me goosebumps. Remember 5 years ago when Coinbase was at the mercy of the market? Back then, over 95% of their revenue came from retail trading fees. When prices went up, they made a fortune. When the bear market hit, users deleted the app and Coinbase was left in the cold. It was a classic cyclical stock. But now, in 2026, their revenue model has made a quantum leap. Coinbase's subscription and services revenue has soared to 40% of their total income. This isn't just an exchange anymore. It has transformed into a SaaS, software as a service company, more like Netflix or Microsoft. Where does that 40% come from? It's from interest on the USDC stablecoin, institutional custody fees, and blockchain staking rewards. Coinbase earns this money regardless of whether you trade. Think of it like this: Coinbase used to sell shovels to gold miners. No miners, no business. But now, Coinbase is the highway toll booth. Whether you find gold or just rocks, you have to use their road and pay the toll. Let's compare. Before this change, under the old mindset, Coinbase had a lukewarm, neutral rating. People thought its only driver was trading volume, which is totally dependent on luck. Back then, analysts couldn't even forecast their growth, and service revenue was less than 5%. But look at them now. It's a total transformation. With a strong buy rating and a price target of $303, there's huge upside. Their core driver is now stable infrastructure services. It's like collecting rent. Their projected revenue growth is 12% annually, crushing the peer average of 8%. They've gone from a casino to a bank, and that is the key to this revaluation. I also want to highlight Coinbase's massive moat customer acquisition cost. It's incredibly expensive to attract new retail investors today, and brokers are bleeding cash to compete. But Coinbase is the gateway to the US market. When a newbie wants Bitcoin, they think of Coinbase first. This brand power makes their traffic nearly free. Plus, CEO Brian Armstrong is turning it into an exchange for everything: stocks, commodities, and more. Now that we've covered the star at the top of the class, let's look at the ones flunking out. eToro. Why the downgrade? This is a brutal lesson in market competition. eToro is currently stuck in the middle. Think about it. If you're a crypto pro, you use Coinbase or Binance. If you're a total beginner who just wants to buy a little Bitcoin for fun, you use Robinhood because it's simple and has zero commissions. So where does that leave eToro? eToro's claim to fame was social trading, copying top traders with one click. But in 2026, that feature is everywhere. To be blunt, copycats have destroyed eToro's competitive edge. Plus, their attempt to crack the US market has been met with strict regulations and local giants who are too strong to beat, leading to high costs and thin profit margins. Goldman's move tells us a clear trend. In the future, you must be either extremely professional, like Coinbase, or extremely accessible, like Robinhood. Being mediocre in the middle just doesn't work in crypto anymore. Let's move from stocks to what you really care about: Bitcoin. As the news broke, BTC surged past 93,000. You might wonder, Goldman rated a stock, so why did did Bitcoin go up? The reason here is due to an indirect impact. You have to remember Coinbase's other role. It's the custodian for almost all Bitcoin spot ETFs, including BlackRock's IBIT. This means billions of dollars of Wall Street's Bitcoin are actually locked in Coinbase's vaults. When Goldman says Coinbase is healthy and a strong buy, they are telling institutional investors your Bitcoin is safe, the vault is secure. This is a massive boost for institutional confidence. Big players don't fear a price drop as much as they fear an exchange going bust, like FTX did. That's counterparty risk. Goldman's endorsement acts like a safety certificate for Coinbase, clearing the way for pension funds and family offices to dive in. Then there's the Venezuela incident. On January 3rd, the US military operation arrested President Maduro. Normally, a geopolitical crisis like this would crash risk assets. In the past, Bitcoin would have dropped out of fear. But this time, Bitcoin didn't care. It actually went up. This is the geopolitical decoupling I've been talking about. Bitcoin has grown up. It's no longer a reactive kid. The market is now focused on fundamentals like ETF inflows and regulatory progress. Some analysts even think that US control over Venezuelan oil will lower long-term inflation, giving the Fed room to stay easy on rates. That's actually bullish for Bitcoin. This breakout above 93,000 is incredibly solid because it happened despite geopolitical pressure. From a technical standpoint, 92K to 93K was a brick wall of resistance. The Goldman report acted like the igniter, catching the bears off guard. If we break 95K, the $100,000 milestone is right around the corner. Now, let's talk about something even more interesting. We know why Bitcoin is up, but why did Dogecoin surge 10% on massive volume? This is what I call the green light effect. Goldman likes Coinbase because Coinbase makes a lot of money. A huge chunk of that money comes from retail traders, especially those trading meme coins. When Goldman says they are bullish on Coinbase's future, retail traders hear something different. They hear, Goldman says the crypto casino is open for business. It's a transfer of logic. Institutional approval of the infrastructure is seen as a green light for speculation. So retail money is flooding back in for revenge buying. Doge had been stuck in a downtrend for a long time. Yesterday's big green candle and $1.2 billion in volume is the real deal. While the Goldman report focused on earnings, it accidentally ignited the animal spirit of the crypto world. It's a perfect loop. The more people trade Doge, the more fees Coinbase makes, and the more accurate Goldman's report becomes. So Dogecoin's surge is a retail party triggered by an institutional thumbs up. This pulled up the whole meme sector. Shiba and PP moved too. The fear and greed index flipped from fear to neutral almost instantly. So, what does the 2026 market blueprint look like? Based on Goldman's ratings for Coinbase, Robinhood, and Interactive Brokers, I see a three-polar world. First, the native giant Coinbase for hardcore players and institutions. Second, the retail hub for the masses and meme players. Third, the pro-platform Interactive Brokers for hedge funds and high-frequency traders. Everything else, like eToro, risks being pushed to the sidelines. What does this mean for you? First, your choice of platform matters. In 2026, compliance is an asset. Keep your money on major, regulated platforms. Avoid small, unknown exchanges. The risk simply isn't worth it. Second, focus on infrastructure. Goldman is teaching us to look at who provides the shovels and collects the tolls. Projects with real revenue like strong Layer 1 chains or DeFi protocols are the best long-term holds. Third, the macro environment is in a Goldilocks zone, 2.8% global growth. Not too hot, not too cold. It's the perfect environment for high volatility assets like crypto. To wrap up, this Goldman report is essentially a coming-of-age certificate for the crypto market. It confirms we are moving from the Wild West to a regulated, professional industry. For Coinbase holders, hold tight. The logic has shifted from luck to growth. For Bitcoin believers, 93K is just the beginning. 100K is the next stop. For Doge and altcoin players, the party has started. But remember to take profits. Meme coins are volatile, so don't get greedy. Finally, I have to ask, seeing Coinbase become a bank and Bitcoin hit highs despite war, is your position big enough? Are you chasing this rally, or do you think it's a trap? My advice, follow the trend, but keep a cool head. Don't over-leverage. In crypto, surviving is more important than winning big once. That's it for today's deep dive on Crypto in 5. If this helped you understand the impact of the Goldman report, please smash that like button, subscribe, and hit the notification bell. It's the best way to support the channel. Also, comment below. Who is the true crypto king of 2026? Bitcoin, Dogecoin, or Coinbase? See you in the next one. Later.